All right. So don't be that guy. So make sure that you're muted, and there'll be some opportunities throughout the evening where you can unmute and offer your perspective on a subject. When our main speaker Todd Hirsch is speaking, they'll usually we'll have a quick Q&A after, and but in the meantime, try to keep yourself muted. For anybody who is attending for the first time, we have a vision, and our vision is financial freedom through real estate investing is attainable for everyone. And our mission is to create a community of real estate investors and promote an environment that encourages learning, sharing opportunities, and building relationships. That when we created that a few years back, obviously we were in person. Some of that is a little more challenging via Zoom the last 2 years, but we will be transitioning to in person at some point here, and there'll be a poll that'll be sending out again this month, and just to guide us and help us kind of feel out how many people are comfortable. And this is only a small pool here. We'll be sending it out to the 3,000 investors and seeing what the consensus is of when we should go in person, and whether we should have a hybrid, and how we should facilitate the Zoom end of things. All right, so the Edmonton Real Estate Investor Association is led by these 5 individuals. I'll start with Sean MP. He's one of our directors, our newest director, and also our community mortgage broker. You'll hear from him shortly. And if you have any questions about rates and how to, get the best rate, or maybe not necessarily the best rate, but the best option for your situation, Sean's a great source for that. Lana is our secretary, and she keeps track of our ongoings behind the scenes and our meetings, board meetings. Walter Rakers is our treasurer. He's had probably the easiest job over COVID. We haven't made or spent much money, so he's just been chilling. We're hoping to get him back at the back of the room in person, being our big security man soon. Linda Hayes is our VP, and she is our traveling board member. We never know if she's in Belize or in Edmonton or somewhere. More often than not, she has a speaking role on a monthly basis to share some of her insight. And lastly, myself, Ivan Abelar. I've been the president for the last 5 years for AREA, and I have the pleasure of emceeing these once a month meetings and guiding us through these presentations and being part of what keeps this going. Disclaimer, of course, whenever we have presenters, and it's more pertinent certain months than others. When this month, we will be kind of taking more look at economics and kind of a wide view of what's happening and where things are going. But there will be a segment in the meeting where people will share an opportunity. They have a property, they have some land. They're looking for a joint venture partner, whatnot. In those circumstances, obviously that hasn't been vetted by us. So always do your due diligence, look for professional advice. And if an opportunity is too good to be true, it probably is. All right. So every month we have some new people. So if you are new to our group, like I mentioned earlier, it's a group of 3,410 investors that are on our mailing list. Obviously, we never have ever had 3,000 people in one meeting at once, but we send out opportunities to that group And those are the individuals that come to our monthly seminars. Usually our attendance is based on what the topic is and which people have an interest in that particular topic. So if you are new to the group, welcome, and hopefully you stick with us and enjoy today's meeting and tap into future meetings. What to expect today? So right away we'll do action takers, and that's a moment for people to brag a little bit. Tell us what you've done since our last meeting last month. Have you went out and have you bought 5 places, sold 5 places? Maybe you just got pre-approved and now you've started the process of buying that, but you're taking action. Maybe you've met up with a few individuals and they are building a plan on how to take over Edmonton. The big or small, action is the key term. Action takers. Then we'll do a market update. I'll touch on the real estate market, and Sean will talk about rates, and we'll go from there. We'll take a quick break, and then we'll queue up our main speaker, which is Todd Hirsch, VP, lead economist at ATB. Fantastic fella, fantastic presenter, and obviously, and the most exciting economist you'll ever find. And then once Todd's done and we've done a Q&A, then we'll let him escape back to his home in Calgary, and we'll touch on deals and steals, and that'll be an opportunity for people to tell us about maybe something they have on the hopper that they're looking for help or something they're looking for. And lastly, we'll do breakout rooms. That's the closest thing we can get to in the Zoom hemisphere. That's the closest thing to networking, where we'll break the crowd into equal groups, and discussions can happen within those groups. And then as they shrink, we combine groups until there's one room, and then everybody leaves, and then the night is over. So that is what you can expect. So first up, action taker. So if you have done something in the last 30 days, or are just about to jump into something, tell us. Tell us about any offers you've made, any flips you're in the midst of, any wholesale contracts you may have done, any joint ventures that you're in the midst of signing or have signed. So unmute yourself, because if you are talking right now, I can't hear you. So unmute yourself and fire away. Not all at once. Now, there is a question in the chat from Anil. If somewhere in the crowd there's somebody that has maybe an opportunity they want to present on a small scale, that can be brought up in the deals and steals. If you want more of a formal presentation done to the group, that can be emailed to me, and that discussion can be done offline, and we can look at whether and run through the board to make sure that it's something that everybody's okay with. Usually that's the case, but we want to make sure that it's the right presentation for the group. So if anybody has a question like that, reach out to me. All right, nobody's taken action in the last 30 days. Seems the last 2 months, we've probably had the least amount of people kind of unmuting and talking. And I know from the numbers that the last few months are the months where the most real estate has been purchased and sold in the last few years. So it's kind of funny that when things are a little slower, it's a balanced market. There seems to be more people that are sharing their actions. But if you're not taking action right now with the market the way it is, and looking for opportunities and making things happen, then you may never. So take some action. I see there's one from Zoria. Looks like she got a CMHC application approved at 90% loan to value on a 50-year AM on a multifamily. Nice. So I mean that's a big one, and obviously with multifamily we're talking likely a very large number, and if you can spread it over 50 years, obviously that makes cash flow easier or more profitable depending on the deal. Anybody else? No, maybe we'll just keep trucking along then. You got a quiet bunch tonight. Just here to... Oh, hello there.
Yeah. I just thought I'd interrupt. I haven't been here for a long time. Actually, I haven't been here since it was in person. So dropping in to see how things are working. I guess you could say I took action. I kicked out a tenant who was ruining my suite, and my action has been trying to get rid of the damage she's done. So
yes, that is an action that I think a lot of us that have rental property have had to do. I think everybody's had to do at least once, and you try to limit that, but it happens. Thanks for sharing, Al. All right. Well, we'll keep moving on here. So this segment we'll have some market update and some rates. Sometimes we touch on economic pieces, but we'll leave that up to Todd tonight. I did want to share one I guess news article. Probably the biggest piece of news that can affect Alberta right now is, if you haven't heard, yesterday the Alberta Appeal Court came out in favor of Alberta, and with the as it says there, environmental impact of the law, it violates constitution and social sharing. So basically there's a Impact Assessment Act, and it's something that the federal government put in place that makes it very difficult to build any type of oil pipeline and some different things that are obviously important to Alberta. Alberta's trying to find other avenues to build its economics on, but the reality is that our resources, natural resources, are still our number one revenue, and certain laws, this one, the Impact Assessment Act, or not laws but acts, they limit that opportunity. So there's an opportunity for the Supreme Court of Canada to overturn this. We'll have to see. The Liberals in Ottawa were quick to say that they'll be appealing this. This has a better opportunity of sticking than the last item that we took to court with the carbon tax and those, and that got overturned at the Supreme Court level. This may I have no pro on this, but from what I've read, it has a little bit of a better chance of sticking, but there's a good chance that it won't either. So we'll see. We'll keep an eye on that. But obviously that impacts our Alberta economics, and limiting ways that we can get our resources out. All right, so real estate market. So I typically prepare a video that I share with another group, and then it allows me just to press play versus repeat it. And so I'm just gonna play that. So turn your volume up. Hello, real estate enthusiasts. Well, the market is still warm. It's pumping out numbers. Some segments have cooled off, so I'm saying warm rather than hot. Hey guys, it's Ivan.
Total residential unit sales in the greater Edmonton area real estate market for April of 2022 decreased by 10.9% compared to March of 2022, and an increase of 2% from April 2021. New residential listings both increased both by 8.8 year over year, 11.9 from month to month from March to April this year. For April, single family home unit sales were down actually both 6.3 from April of last year and 11.3 from March of this year at 1,704. Condo unit sales increased by 26.6% from April 21, but were down 7.2% from March to April. Duplex row house unit sales were up 2% year over year, yet decreased 20.6 month over month. Single family homes average price is 510, and that's increased 11% year over year, and month over month a decrease of 1.4%. So now I'll let my friends at Bode kind of go into this more in detail.
What's happening in Edmonton? Well, in terms of the greater Edmonton area, this chart here is looking at the number of new home listings coming to market each month for the last 4 years. So you can see the bright pink line here shows you what's happened in 2022. And in general, in the last few months, the number of new listings has been up over previous years, but considerably up here in April, most recent month. So 41% more listings in this most recent April than the average of the 4 previous Aprils. So a lot of new listings have just come to the market in Edmonton. And then on the other side of the picture, we can see what's happening in terms of sales. So again, the bright pink line showing you 2022, sales have been incredibly strong so far this year. And again, we saw another great month here in April, up 68% versus the average of the 4 previous April. So an incredibly strong April, but not quite as strong as March. So March was a record-breaking month of sales, but April, incredibly strong, but not quite as strong as last month. And then given the number of new listings that came to market and the fact that the sales weren't quite as strong as the previous month, the total inventory, or the total number of homes for sale, has actually increased a little bit. So again, you can see the bright pink line here for 2022. Overall, inventory had been quite a bit lower, but it's jumped up now at the end of April. So it's down, still down over previous years, but not down quite as much as it previously was. So fewer homes for sale right now, but starting to be more homes means it's becoming a little bit less of a seller's market. It still is a seller's market, but a little bit less so. Then on the right-hand side here, we've got months of supply. So this says, given the amount of inventory for sale right now, and given how many homes we're selling per month, how many months would it take to sell through all of the homes that are currently for sale? And right now, there's about 2 months of inventory available in the greater Edmonton area, which from a historical perspective is one of the lowest months of supply that we've ever seen in the area. So again, still a good time to be a seller, but this chart's starting to tick up in the same way that the number of homes for sale is starting to go up. So if that trend continues, the strength of the seller's market will start to shift back a little bit more towards balanced market, but I still think we've got many months of seller's market still left in Edmonton. So what does all that mean for prices in the Edmonton area? Well, here we've got a chart of what's happened to prices for the last 17 years. You can see the peaks here in 2007, another peak around 2014-15. Well, recently prices have been going up quite quickly since 2021. And in the last month, prices have gone up 1.9% over March. So prices still heading up. They're up about 9.4% year over year. So versus this time last year, end of April last year. So good price movement here. Great news if you're a homeowner in the greater Edmonton area. Obviously, this is going to make conditions more challenging for buyers, especially with interest rates also going up. So that's what's happening in terms of prices.
All right. So what some nuggets to pull out of that are One, inventory has gone up for the last year and a half. We've been asking people to put more and more stuff on the market because we've been under we've had a shortage on listings, and so that has played a part on how well the real estate market statistics have looked over the last 2 years. People finally have decided to do that, so our inventory is on the way up. And then you can see that the sales are still high, but there's a significant drop in some of the segments between March and April. So it'll be something to keep an eye on moving over the next few months. If everything's sold today, or it would take 2 months for everything to sell. So it's obviously a seller's market still, but it may follow kind of seasonal trends, like every other year, where we may still have we will probably still have a strong May and June, but like a lot of years, the summer kind of cools off, whereas last summer it didn't cool off. This summer we may have a cool off, so I'd say we'll have a strong seller's market for probably the next maybe up to 90 days or just shy of that, and then we'll maybe follow traditional trends. So yeah, for those of you that are maybe using the information to plan purchases and sales, it's always good to look at trends, obviously. Now I'll get Sean to chat on his business. I guess the mortgage rate business. There's been all kinds of things that have been happening over the last 30 days. Sean?
Oh, excuse me. Thanks, Ivan. Rates go up every week, sometimes twice a week. So if you ask me what you can get on a mortgage today, I would say I can't tell you until I look at the lender's emails from tomorrow, because there'll be and rates on a steady basis. So there's the prime rate is 3.2, which is an increase of 75 points from where it was for most of COVID at 2.45. So that means variable rates and adjustable rates and HELOCs, you're paying more money for those types of mortgages and loans. The fixed rate is tied into the bond rate, and it's gone up significantly, almost 2 points in the last few months here. So you used to be able to get a rate for around 2% for an insured mortgage. Now you're 4% for an insured mortgage. So it's a significant increase. An average interest rate is around 5 to 6%. Healthy interest rate. I don't know if Todd's going to give us some insight on that or not. So one thing to remember is that the rate is not the driving factor for your mortgage. So there's lots of other things you need to look at. Long-term plans, how long do you want to hold the property? How easy do you want to get out of your mortgage? If you have a variable or adjustable rate mortgage, you have a 3-month interest penalty to get out of it. If you have a fixed mortgage, depending on the rates are, you could be paying a fairly healthy penalty to get out of that mortgage. And again, Todd might be talking about the potential recessionary factors that may come into play. So if you're in a fixed mortgage, recession and interest rate drops won't affect you to the good. So you may want to be in a variable to take advantage if rates start to trend down again. So lots of good products out there on the market for people who want to do something like the Smith maneuver to get a HELOC that ties into their mortgage so they can always access all the equity in their property. It's a good product for your home, primary home, but also for your rental properties. If you have a readvanceable mortgage, every time you make a principal payment on that rental property, that money can go back into a HELOC. So you don't have to have a sustaining fund of $3,000, $4,000, $5,000 for those emergencies. You can have it sitting there in a HELOC ready to go if you have any significant costs, the furnace goes, or you need to fix a roof or something. It doesn't have to come out of your pocket. you can use the HELOC, and the interest is generally tax deductible. So come out ahead that way. You can use your cash for other purposes. Purchase plus improvements has been a popular product here. So if you're buying something that needs work, you can build that into your mortgage. You do have to either work with a contractor that's going to wait till the work's done to get paid, or you have to be able to finance it as you go. People do that sometimes through lines of credit, or maybe they use their credit card short term. Get some work done, we can get draws on that. You can go up to, depending on the value of the property, go $60,000 or $100,000 sometimes if you're the right lender on the right type of property. So it's certainly something to look at if you want to do that. BRRRR is a very common strategy right now: buy, reno, rent, refinance, and repeat the process. So you can, good BRRRR, you'll get all your money back out of your property, and you'll basically have a free property. So if you're employing that strategy to renovate and hold on to properties, make sure you talk to your broker and have your exit strategy in place so that you don't find out that maybe you don't qualify for the mortgage you want at the end of the project. So generally you can do those through the A lenders because you're keeping it as a rental property. If you're doing something like a fix and flip and selling it, the A lenders and most of the B lenders don't want any part of it because they like to keep their money in play for longer periods of time. So I got a product just came on the market here this week. If you want to guaranteed financing on a specific product, we got a program that'll let you do that. They'll guarantee, the lender will do an in-house appraisal of a property that you're writing your offer on. So you have the choice of writing an unconditional offer if you know you're going to get your financing guaranteed up front. So they'll give you a certificate and everything else saying we'll give you X number of dollars on this property. So that's something in maybe a competitive flip market or something like that. You're looking to have an edge over somebody else, or it's a foreclosure or something where you can't write conditions. Get hold of me and we can talk about the options for instituting that program. I'm running out of things to say, so if anybody's got questions that they want answered now, open to those, or check the screen, seanimpey.com. You can get hold of me. My emails and phone numbers are there. You can drop me a line, and you want to just chat about what you can qualify for another rental property, which is qualification for rentals is always really dependent on how much rent you bring in. So high rents on a property will mean you can qualify for more mortgage and a higher price property. So lots of variables in there.
I would encourage you guys to reach out to Sean and go for a coffee with him. I went for a coffee with him yesterday, and I've been in business for 16 years. I've bought a bunch of property myself and have a rental property, but sometimes things change over the years, some different rules, and sometimes you need a little bit of a refresher of different techniques to use. And one thing that a good mortgage broker knows is, when they listen to your situation, they know the right product to direct you to. And in our discussion yesterday, I can see that Sean knows that and can guide you appropriately. He works with lots of investors, and both utilizing traditional routes as well as private money opportunities. So grab a coffee with him and kind of just float some ideas, and he'll poke some holes in your strategies, and that way you can learn, so you can make sure that you attack a opportunity correctly, so you're not you're not disappointed with the outcome. The banks right now can be in certain situations very, very conservative for certain situations, and there's people sitting in cubicles in Calgary and in Toronto, underwriters that are just looking for ways to let the air out of your balloon and not allow your deal to go through. So it's important to have all your ducks in a row and have a broker that can I guess package that deal correctly. So and Sean's one of those.
So the time to talk to your mortgage broker is not the day you write the offer on the property.
Yes. Yeah.
So well in advance, plan for, where's your down payment coming from? Do you have to season money in an account for a certain period of time to show it's yours and things like that? Most lenders don't allow quote borrowed funds on rental property, so there's ways to get prepared for those kind of things. So it's Ivan says, let's go for a coffee. And
anybody have any questions for him or myself? It's a quiet bunch, Sean.
it is. It's
Everybody's just got their ears on only. No voice.
No Gert to ask the questions.
Yeah, we miss Gert. And when there's nobody asking questions, we can at least make fun of them. All right. Well, what we'll do, I think we're doing great for time. So at 7:15, we'll take a quick 5-minute break, and that'll allow us to kind of transition and get Todd all queued up. So as I would assume all of you or most of you know, our main speaker is Todd Hirsch. So he's a VP with ATB and economist. And so he's a great presenter. And so we usually have him, I think we've had him once a year for the last 4 years, I want to say, roughly. And the last few times on Zoom. Maybe next spring we can get him in person. We'll see. We'll talk to him. But maybe even during your 5-minute break, visit toddhirsch.com. You can see what's going on in his world and buy one of his books. He has a great book as well. So top up your drinks, go run to the bathroom, and in the meantime, we'll queue up Todd and he'll take over.
Hey, Ivan, are you still there?
Yeah.
Yeah, I got you on chat there. Yeah, I was saying I'm coming to Edmonton around from May 21st to 25th. So I want to see if we can have a chat.
Absolutely. Yeah. Any one of those days. Yeah. You have my contact info?
Yeah, get me the contact info. Yeah.
Here, I'll put it in the chat just and
okay.
You can always reach me via call or text by the one or
when did I catch you? I think I had one of your cell phone when you were fishing somewhere. Was it last year? Was it last spring?
Was that you? Oh, yes. So you were calling about places in Devon, right?
Yeah. You were fishing with your friend. Then after that, I didn't.
I was at a cabin. Yeah. I said, I'm sorry, the connection probably isn't the best.
Yeah. Then with the lockdown, it didn't work out. But this time, yeah, I want to get it going very fast. Yeah.
It's funny because I just put up 3 properties for sale in Devon again.
Oh.
3 different ones. Yeah, I have an investor client that has, I think, 25 properties, and a bunch of them are in Devon.
Oh, okay.
But yeah,
this summer, I want to move the family to Edmonton, and
oh, perfect.
Yeah, that's why I want us to have a chat there. Yeah.
Yeah, you got my phone number is there, but yeah, it sounds like you have my number.
Yeah, I think so. Yeah, yeah.
We on the chat
Excuse
there.
me.
Yeah.
Yeah.
Oh, excuse me. I was just gonna ask a question. So this is my first time here and
Yeah.
with one of these meetings, and I'm just getting started. I'm just getting interested in real estate investing and kind of the stuff this and what. So I guess I'm just asking, what would you say is the best way to how did you start on your journey, and what do you think are some of the best ways to start?
Well, a start is probably to find somebody to help you start.
Okay.
Sitting down with somebody and having a discussion about the different ways of investing in real estate. There's a few different routes to take. There's some better than others for beginners, for sure. And talking, obviously, a big part of it is having a plan, and a big part of step one in your plan is kind of finding out how you're going to fund your first purchase. That's a big part of it.
Mhm.
And so a discussion with someone like myself, in combination with somebody like Sean. I'm meeting with I was supposed to meet with somebody today that was in your same shoes. We changed it up till Friday, but he had the same question, and so I just said, well, let's go for a coffee and we'll talk about kind of the first steps. It's too many people just jump in and don't have the best experience in real estate. So you have to make sure that you have your ducks in a row, and you have, I guess, the right goals and the right vision and right.
Okay.
These meetings are great for kind of giving you some knowledge on when it's good to buy or sell, and we have different presenters on different types of investing, whether it's buy and hold and just be a landlord and grow a portfolio based on cash flow and mortgage pay down and equity. There's many fix and flippers in here, which takes a different knowledge base. Some of the same, but obviously different strategies. You're not hanging on to the property long. It's quite the opposite. You want to have quick turnarounds after you've made the right choices on purchases. There's many wholesalers, so a lot of people start with wholesaling. I've never done the wholesale end of things, but I've deal with many where they basically tie up a property and that it's a good deal, and they try to find a buyer for the paper, essentially someone that can close the deal, and then you as the wholesaler are making the spread, whether it's 5,000, 10,000 or 20,000, kind of on having somebody else close it. There's people that build a business around rent to own. There's different avenues. So kind of sitting down and touching on all those, and occasionally we'll do a presentation on here that touches on a few of them, but we can only get so deep into each. Each of those avenues are a seminar on its own.
Okay.
An all-day seminar on some of them.
Yeah.
It really depends on your personal situation there, Nick. So if you've got money saved up for down payments, whether you got a job, you can support a mortgage if you need that to help out to buy and hold, or if you don't have two nickels to rub together yet, and you're just looking for a way to maybe, wholesaling doesn't cost you much money to start, but you got to know what you're doing. There's agreement for sales. You can potentially buy properties for none of your own money into the deal. So some of those are fairly advanced strategies. So, if you drop me an email, glad to have a short chat and find out what your situation is. And
yeah, so just you want me to just drop my email in the chat?
Well, my email is, my website is right there. If you see my picture, seanmp.com.
Oh yeah.
You go to that website, you'll get my email and my phone and all my contact information. So an email.
Okay.
We'll find out what you're all about. And
if you put your email in the chat, you may get 10 people calling you.
Okay. I see what you mean.
Yeah, reach out to Sean. He's a great source of information. I'm here to help as well if you need it.
So what? Sorry, what's the website again? Sean M.
How about type it in the chat there, Sean?
Yeah, it's on my photo. If you see my photo there.
Yeah,
Nick?
I'm just
SHAUNE.
IMPEY.com.
That's it. Yeah.
Okay.
Type it in and save it in your favorites.
Yep.
For a good time, go to SeanMP.com. All right. Well, I don't know if everybody's filtered back, but I see that Todd has shared his presentation, Sharper Focus. So maybe we'll get rolling. And like I was mentioning before the break there, Todd's presented with us many times. And so, there's always some great information that we gather from that. He's, like I mentioned, he's an economist, chief economist, and a VP with ATB. And he serves on a number of boards. He has his podcast and his book, and I'll let him, go over those items himself as well. But I'll let you take over, Todd. It's good to see you.
Great, thank you very much. Nice to see you. You can hear me and see my slide deck okay?
Yes.
Wonderful. Thank you for inviting me back to speak with this group. This is a bit of an annual tradition. And when we used to meet in person, it seems I always was speaking on the night of an Oilers playoff game. So tonight we missed it by one. We got our hearts broken last night, I guess. I'm joining you from Treaty 7 territory, home of the Calgary Flames, where I hope they're not going to break my heart too. I do have to say, if it comes down to the Flames and Oilers, and we hope it does, I will be cheering for the Oilers because I am an Edmonton boy, born and raised. I've been exiled in Calgary, where I've been here for the last 33 years, but wonderful to join you tonight. Title of my presentation, Sharper Focus, Making Sense of 2022. A lot of times when people ask me to speak, they'll say, Todd, get out your crystal ball and tell us what's going to happen in the future. And I think everybody understands, of course, I don't have a crystal ball. But even if I did, the crystal ball these days is looking a little more like this, a bit more like a lava lamp. In other words, we can peer into it, but there's a lot of things that are changing and shifting shape. And just when you think that you've got a feel for the lay of the land, everything starts to morph and move on you again. So it's really hard in this environment to make any kind of sensible predictions about what's going to happen. 2 years plus of COVID, and now 2022, as we sort of move, I don't want to say out of COVID, but as we now learn to kind of live with COVID, we were hoping that the economy, that the world would become a bit more normal, a bit more predictable. But in fact, even with COVID a little bit in the rearview mirror, there are all sorts of things that are complicating the picture. Tonight, I want to focus on three things and bring them into sharper focus as to how they are affecting Alberta's economy. And I love alliteration, so it worked out in my favor tonight. They all start with the letter I, and they are invasion, inflation, and interest rates. Now, there are other things, of course, going on as well, and perhaps during the Q&A we could get into those things, but I want to focus on these three because I think they are, in fact, having the biggest impact on our economy. Let's start, first of all, with invasion. Now, of course, we are talking about Russia's unprovoked invasion of Ukraine. And I think it's really important that from the outset, we recognize first and foremost, what is happening in Ukraine is a humanitarian crisis. There are millions of people fleeing literally for their lives. Most of us, I'm guessing on this call, have probably never lived through that kind of atrocity. And I just want to be really clear when I talk about invasion that we hold in our minds first and foremost the people of Ukraine. Secondarily, then, we start to consider the economic impacts of what's happening and how they are affecting us here in Alberta. And to do that, I put together a little bit of an economic balance, because there are things on the plus side and on the negative side. On the plus side, again, I really sort of cringe to think that what's happening to the people of Ukraine is in any way a benefit to us here in Alberta. But in a very awkward kind of way, we are receiving some benefits. Our economy is actually being given a bit of a boost. So let's break down the pluses and the minuses, and we'll see where on balance we end up. On the plus side, there's no question higher energy prices are a benefit to Alberta. We are seeing roughly a 50% price premium built into global oil prices and global natural gas prices, at least judging from where those prices were maybe 6 or 8 months ago, prior to any serious talk or any fear of Russia invading Ukraine. Over the 2 years of COVID, oil prices had rebounded very nicely to around $65 or $70 US a barrel. And here we're talking the North American West Texas Intermediate benchmark price. But when Russian tanks rolled into Ukraine, those prices immediately soared above $100 a barrel, where they have remained ever since. Now, $100, $110 oil, whatever it is on any given day, is without question a benefit for our oil and our natural gas producers in this province. It's also an enormous benefit to our provincial government, and by extension, all the taxpayers of Alberta, because in fact, the provincial government was able to balance the budget in February years ahead of what even the most optimistic forecasters would have expected. And we all understand the way, or the reason they were able to balance the budget is because of this unforeseen windfall of oil and gas royalties. So that is the first factor in the plus category, but there are others. Other commodities, notably wheat and canola prices, other agricultural prices are also seeing very, very good levels. Here it's more what Ukraine produces and competes with Canada. Ukraine, a very large wheat producing region, as is Russia. But with those exports either being embargoed from Russia or not able to get out of the ports in Ukraine, those wheat and other agricultural prices are also skyrocketing. That is a definite bonus for our farmers and our agricultural producers. And then finally, there are perhaps some export opportunities, not just energy and agriculture, but all of the commodities by which Canada and Russia competes. So here we're talking things like fertilizer, we're talking things like base metals. Russia and Canada actually compete for a lot of those things, and obviously oil, gas, and agriculture. And with the embargoes that the rest of the world is placing on Russia, it does present perhaps some opportunities for Canada and our exports to get into those markets and fill those gaps. And I think it is a benefit, although we should probably limit our expectations on how much of a benefit it is, simply because of the capacity constraints by which we export these things. If it's pipeline or shipping capacity, it's really impossible in the short run to say, well, we're going to double our oil exports or double our wheat exports. We can incrementally increase our exports, and that will be a benefit, but we have to kind of temper our expectations. So there we see a whole pile of benefits for Alberta, but there are some negatives as well. We can talk about instability in financial markets. I hope those of you who invest in stock markets or maybe your RRSPs don't open your statements this month because you're going to be disappointed. There's a lot of volatility in those markets right now. It's not a one-way street down, although the last couple of days it feels like it, but rather it's just very volatile and very choppy. You know, a big drop one day followed by a subsequent increase the next day. A lot of volatility. That is a difficult environment for businesses in Canada, in Alberta, companies that need to go to those global financial markets and raise capital. It's a tough environment to raise capital. And it's also a tough environment for average investors, like probably most of us on this call, who might have some of our investment tied up in those stocks, those stock markets. There is a wealth effect. When we see the volatility, we might just feel a little less secure as investors, as savers, and that acts as a drag on the economy. There's also price instability in commodities. So I just talked a lot about high oil prices, high natural gas, wheat prices, all the commodities are up, but they're also very volatile, notably crude oil. So sort of like stock markets, those crude oil prices, they can rise or fall, $3, $5, sometimes $10 a day. That is a bit unusual. This volatility is simply because commodity traders know that what is driven prices higher is the geopolitics of what's happening right now. That is really unpredictable. What Mr. Putin's next move is, no one really is certain about. And as a result, high oil prices are good, but volatility in those prices is not good. It makes for a very discouraging environment for oil companies in Alberta, for example, to make long-term spending decisions and capital expenditures, those projects that would look maybe 10 years, 20 years into the future. Difficult to do in this price environment because prices are so volatile. And then finally, we have inflation. Now, I'm going to say a lot more about inflation in a minute, but suffice to say that all of these commodity prices have helped push prices higher for consumers, also businesses, also farmers. So when those farmers here in Alberta, our agricultural sector, when they are looking at high prices for wheat, high prices for canola, but they're also looking at really high prices for fertilizer, for fuel, for pesticides, all of their input costs are also almost doubling. So that acts as a negative. On balance, I would say in the short run, it's probably a wash for Alberta. In other words, the pluses and minuses are probably loosely in balance in the short run. But I would suggest that in the medium to longer term, it looks a little bit more like this. The longer term impact on hydrocarbons, I think, is a net negative for Alberta. Now, what's happening here with Russian exports of oil and natural gas and the embargoes that the rest of the world is putting on them, it's putting a lot of countries, especially European countries like Germany, in a really uncomfortable situation because they would like to say, well, Russia, we're not very happy with you. We're not going to buy your oil and gas. But the reality is most of Europe is dependent on Russian hydrocarbons for their fuels. And it's not as easy just to say we're going to cut off the pipeline of exports. Now, what this, I think, is going to do is sort of bring forward the timeline by which the global economy reaches peak global oil demand. Everyone knows that at some point, peak oil demand is going to happen. If it's going to happen in the next 2 years or 5 years or 15 years, 40 years, people will disagree on the timeline, but everyone understands that peak oil demand is going to happen. It doesn't mean the global economy stops buying oil. It just means that it reaches a peak and then gradually levels off and starts to decline. But what this invasion and the embargoes and the desired embargoes are doing is bringing forward the timeline by which the global economy will reach peak oil demand. It will hasten the movement by these countries to move to other forms of energy, renewable energy and net zero carbon energy, stuff that the whole world is trying to do anyway, but now the timeline is going to be tighter. Now, a lot of people, including myself, would say, well, there's actually some really good news about this. The faster we can move to net zero carbon, the better chance we have of avoiding absolute environmental catastrophe. However, for Alberta, it does sort of tighten the screws a little bit tighter for our hydrocarbon producers, for this province, which is also moving towards a net zero carbon future. It just shortens the timeline. And I think that means in the medium to long run, it acts as a bit of a negative for our economy. Not a catastrophe, but it does, I think, act as on that negative side. So the economic balance for Alberta Russia's aggressions in Ukraine, in the short run, it's probably a wash. In the medium to longer term, a net negative. Now let's turn to inflation. I'll give you a second to digest that, and apologies for perhaps the somewhat rude references there, but I think I couldn't resist this. I think this is what a lot of us are experiencing when we are gassing up our cars at the gas station, and not just gasoline, but almost everything we buy. I don't know how many of you spend time in grocery stores or looking at your electricity bill, your power bills. Almost everything is rising in price. A year ago, sort of the summer of 2021, it was really just energy prices and food prices that were showing these jumps. Other prices in the consumer price index were still relatively well contained. But now into 2022, it is almost every category within the consumer price index that is rising above 4% annual rate of inflation. Now, what's driving inflation in 2022 is very different. It is sort of a perfect storm of a bunch of different factors, very different than what we would have seen. For example, some of you of a certain vintage might remember the inflation that we would have seen in the 1970s and early 1980s. The last time we saw rates of inflation where they're at. What we're experiencing today is different. There are 4 factors driving inflation today. Number 1, supply chain disruptions, a lot of that related to COVID. About 2 years, 2 years and 2 months ago, when factories around the world started to shut down because of COVID, we saw, in fact, just how fragile our global supply chains really are. These global supply chains that over the last 40 or 50 years that we've developed this just-in-time movement of all these little component parts. And in March, April of 2021 or 2020, they all started to collapse. And this has created shortages that are still ongoing even today. We were renovating a bathroom during COVID last year, and it took 7 months for us to order a sink. And I think every one of you you might have a similar story. So when there are backlogs of global supply chains, it causes shortages. Those shortages have been partially responsible for higher prices. But there are other factors. Commodity prices for food, they have been rising irrespective of what COVID's done. Over the last 10 years, we've seen increased rates of extreme climate events, increased rates of flooding, of drought, too much heat, too cold, too many grasshoppers, all of these things that have prevented normal crop yields around the world. This summer, what's happening right now in parts of Manitoba, unbelievable floods that they're seeing. Last summer here in Alberta, the unbelievable drought and record heat we saw. In both situations, we are seeing crop development being held back. Now, fortunately, this doesn't happen everywhere around the world at the same time. It's a good thing it didn't, or we'd be in real trouble. But these more frequent extreme climate events are preventing normal production of a lot of food commodities, and that is helping push prices higher. The third factor, wage price inflation. This was happening a little sooner in the United States. Already in 2021, we saw it there, but now in 2022, both Canada and the US, employers are seeing a labor shortage. Just about every industry, almost every region, companies are saying we can't hire enough people, and there are jobs that are going unfilled. Nationally, Canada's unemployment rate is down to a 40-year record low, or a 40-year low, about 5.3%. Still a little higher here in Alberta. We'll get to that in a minute. In the United States, the unemployment rate is hovering around 3.5%. And what happens in those tight labor conditions is wages start getting bid up. Employees know they're holding all the cards, they are demanding higher wages, and employers that can't find people are having to offer higher wages in order to attract workers. And those higher wages are being passed on in some cases to their customers through higher prices for goods and services. And then finally, just the good old-fashioned consumer-driven inflation. This would be sort of out of the classic textbooks in the 20th century, economic textbooks that talk about, why inflation happens. It's too much money chasing too few goods. And we are seeing this level of consumer demand in Canada and in the United States. A lot of households during COVID were impacted negatively economically by the COVID lockdowns. But in fact, during the 2 years of COVID, 86% of Canadian households experienced no disruption to their income. And the other 14% that did experience a disruption, in many cases, they were able to acquire some emergency relief funding from the federal government or from EI extensions or different programs that were available. And what this has created, the 86% of households that experienced no disruption, what was disrupted, as we know, was their ability to spend any money. For the better part of those 2 years, we couldn't go anywhere, we couldn't travel, we couldn't go to a restaurant or a sporting event or a concert. Stores were closed for a lot of that time. So as a result, Canadian households have amassed a lot of cash. And they have been outspending money in certain areas, things around home renovations, new and used vehicles, how many people build decks off their backyards. As I mentioned, we renovated a bathroom because we couldn't go anywhere. We got sick of doing jigsaw puzzles. So we said we might as well at least spend some money and make our bathroom a little bit better. But a lot of consumers have been out busy spending money, and that has been a fourth contributing factor to inflation. So here you have these four really unique factors. It is a bit of a perfect storm. And you didn't see all of these in the 70s and early 1980s. It was really more that fourth one, the consumer-driven inflation. So we have this really unique brand of inflation in 2022. And this brings me then to my third I, and that is interest rates and where they're going. And my guess is most of you on this call tonight, this is probably what you're going to be most interested in hearing about. The Bank of Canada, the US Federal Reserve, central banks around the world are now responding very aggressively with rate increases, trying to get the inflation genie back in the bottle. Now, a lot of observers are saying, well, central banks, thanks for coming out, but you're really too late to the party. Some critics are saying that the Bank of Canada really should have been raising rates even as early as last summer or last fall. They've waited until March for the first rate increase and then a big rate increase we saw here in April. But there is a little bit of a sense of almost panic by these central banks with these very aggressive rate increases and signals that rate increases are going to continue to be quite steep over the coming months. Now, why didn't they start raising rates back in maybe September, October, November of last year, when it was, there was evidence that inflation pressures were mounting? It is easy to look back with hindsight and sort of be critical of the Bank of Canada, saying they should have acted then. But think back to where the Canadian economy was in November of 2021. We were right in the throes of the Delta wave of COVID. Businesses were being forced to shut down again. The passport system came out, mask mandates, travel restrictions were tightened, everything moving into November, December of last year. We tend to kind of forget that we were in the middle of a very severe wave of COVID. Had the Bank of Canada announced rate increases in the late fall of 2021, in the middle of COVID, there would have been howls of protest, political and otherwise, about what the Bank of Canada was doing. And I'm sure that sort of weighed on their decision to hold off on rate increases. Back last year, the Bank of Canada, they were using words like transitory, that this inflation was, don't worry about this too much. It's transitory, it'll pass. They dropped that T word in January and replaced it with inflation is stronger and more persistent than we thought. And by February, we're signaling that rate increases were coming. And now, of course, we've seen in the last month or so, 2 months, 75 basis point increase, or 0.75%, with indications that there's another 50 basis point rate hike coming in June. Now, where rates go from here, it's hard to pinpoint, but my forecast is that between now and between now and May of 2023, we're likely to add another 200 basis points, or 2 percentage points, to that overnight rate, which of course then filters into all the mortgage rates and everything else. So roughly 2 percentage points higher. Now, that's probably the likeliest scenario, but it's not the only scenario. There are lots of other possibilities. We could see perhaps more geopolitical aggressions, maybe Mr. Putin. It's too nice of an evening to really go down the dark alleys of what Mr. Putin could do. But if those geopolitical events heated up, if inflation perhaps starts to tame on its own and come under control, the Bank of Canada might go a little more slowly, maybe only 150 basis points, or maybe even 125. Then again, we could see a situation perhaps where the global economy starts to heat up in the second half of 2022, with inflation rising even more steeply. I think that scenario is less likely. We saw inflation numbers out of the United States today, and they did suggest that there was a bit of a drop in inflation over the previous read, from 8.5%, I think it dropped to 8%. Economists are hopeful that maybe this is a sign that inflation has peaked in the United States and is now going to start to come down. That might pave the path for the US Fed and the Bank of Canada to perhaps go a bit more slowly and gradual with rate increases, maybe 150 basis points. But for now, I think 200 basis points a year from now is the most probable scenario. Just to conclude, then, this brings me to our Alberta economic outlook. I always like to joke that the secret to good forecasting is to revise frequently. And that way you're never really wrong, are you? You can just say, well, that was the old forecast and now we have a new one. And I am being called on, my team and I are being called on more frequently to revise our updates or our forecasts because the lava lamp does keep shifting. At the moment, our forecast looks something like this. 5.1% real GDP growth this year, probably moderating to about 3.5% next year. Now, 5.1% increase in GDP, and that follows a similar rate increase last year. In an ordinary year, 5% real GDP growth would be fantastic. But we know that 2022 and 2021 were not ordinary years. These are years coming on the heels of 2020, where our economy sustained an 8% drop in economic activity. So we are seeing this natural rebound in 21 and 22. Rebound because, of course, COVID restrictions have been lifted and the economy is now, we've got a long way, a lot of ground to gain from where we left off. So good growth rate this year, but nobody should be doing too many victory laps about this good rate of growth in Alberta. For one thing, it is happening everywhere. It is not just Alberta that we are seeing this nice rebound in economic activity. It's happening everywhere where there was a COVID lockdown in 2020. The other factor, of course, is that even with 5% growth this year, it doesn't even get us back to pre-COVID levels of activity. We don't think we'll reach that mark probably until early 2023. So you think about that, between the beginning of 2020 and early 2023, that is basically 3 years of lost economic growth, a big drop, and then 2 years of pretty rapid recovery. The unemployment rate, we think, is going to remain a little bit stuck, probably around 6.7%. Current read right now was a little bit lower than that. April, I think Alberta's unemployment rate came in at 5.9%. And we were encouraged by that. Job creation does seem to be a little bit stronger than we thought. So we may revise downward that 6.7%. But for now, it's probably going to hover in that range over the whole of 2022. The growth is going to be concentrated in a bunch of sectors: technology and digital, which everywhere across the province, particularly Edmonton and Calgary, we're seeing, and we've been seeing this growth trend for the last decade, but strong growth in technology companies and the digital sectors. Agriculture and agri-foods. Now, agriculture, I have to put a little asterisk beside this because we're not quite sure. Yes, commodity prices are great at the moment, but I also mentioned input costs are also a real burden on farmers. And the biggest wild card, we don't know what kind of growing season we're looking at in 2022. Depending on where in the province you're looking, moisture levels are okay to not great. I think those farmers are still hoping for some more moisture. Seeding is already being completed in a lot of parts of the province, but we still need some more moisture. If we see the kind of drought and heat we saw last summer, it's not going to be a great year. But if we see the growing conditions like we saw, for example, in 2020, that was a fantastic growing season for our farmers. As any good farmer will tell you, you don't count it until it's in the bin. And we've got a long way to go between now and harvest, but we are hoping for good results there. Tourism, with international borders, especially that between Canada and the US being restrictions being lifted, tour operators in the province, the hotel and recreation sectors looking at a nice rebound from two disastrous years, 2020 and 2021. Renewable energy and clean energy technology. Now, this is where there's a lot of activity being led by the business sector. This is where Alberta's energy producers, especially the large oil and gas producers, are focusing a lot of their capital spending. Because, to borrow Wayne Gretzky's metaphor, these big oil companies, they know where the puck is going. It is towards a net zero carbon future. And governments, in a lot of ways, are kind of following the lead of businesses on this. Businesses are not being goaded by governments to, penalize them for doing this. Businesses are leading the charge on this, and governments are following with subsidies and different tax concessions and different programs to encourage more renewable and clean energy technology. So we think those are going to be growth industries. Now, so I've got 5 bullet points there, growth in those sectors. We still have to keep in mind, however, that these 5 sectors combined are still dwarfed by our traditional oil and gas sector, which I would describe in 2022 as being in stable to good shape. Certainly those high prices are really, padding the pocketbooks of oil and gas companies, but they're not growth engines in the province. They are not out spending a lot of money on new capital projects around traditional oil and gas extraction. They are spending money perhaps on maintenance, especially in the oil sands, but the growth is not coming from our traditional oil and gas producers anymore. I would describe it as it's a backbone of our provincial economy, but not a growth engine. Now, a backbone is important. You want to make sure your backbone is in good shape and you don't neglect your backbone, but the growth is going to come from these other sectors and probably less so from our traditional energy producers. There are some risks to the somewhat rosy 5.1% forecast, and I've sort of gone over these in quite a bit of detail already. Geopolitical events, like I said, we just don't know Mr. Putin's next move. We don't know what China might be thinking of doing. We'll have to wait and see. I'm not a geopolitical expert, but there are lots of different possibilities that pose some risk to the economic forecasts. Inflation, as I talked about, also a risk. If inflation tracks even higher, that will put even more pressure on consumers and businesses and act as a drag on the economy. Rising interest rates related, obviously, to inflation. That too is going to take a lot of the wind out of the sail, particularly of the mortgage market and other borrowing consumers. And then finally, I'm happy to report that COVID has fallen to number 4 on my list of things to worry about around the economy, rather than the only thing that I could talk about. 2 years ago, if we were doing this webinar, I'm sure all eyes were on COVID. We all wanted to know what's going to happen. Today, it falls to number 4, but it hasn't fallen off the list. It is still on the list of things that pose a potential risk to our economic forecast. I am not expecting any further lockdowns or restrictions or, passports or mask mandates, but we don't know. In fact, there was just a news report out of the United States. Masks are going back on. School kids in Pennsylvania, New Jersey, and Delaware, I think it was. We see what's happening in Shanghai and Beijing. So we can't exclude the possibility of another wave of COVID having an economic disruption. Again, not my forecast, but we are keeping a close eye on COVID's next move. So with that, we're almost at 8 o'clock. I'm going to return to you now. And do we still have a few minutes, Ivan, for if there are some questions?
Absolutely, we still got time.
If there are maybe, Ivan, if there are some that come in the chat, you can read them to me or moderate them.
Absolutely, yeah.
I have a question. I actually have 2 questions.
All right.
Thanks, Todd, for showing up tonight. Appreciate your teaching us all about economics. So my first question is, because we live in Alberta, you would think gas and dairy prices would be cheaper for us. How come they aren't?
Well, because it is a free market, and those gas and, well, let's set dairy aside for just a minute, but oil producers and refiners, we live in a continental market. If we were to restrict the exports of our products out of Alberta, that could help keep prices lower. But it would, that's basically what Trudeau #1 did in 1980. It was called the National Energy Program, and it didn't go over very well here in Alberta. So it does have to do with us being part of a free market where producers can sell their products onto global markets and get the best price for them. It feels a bit counterintuitive sometimes as Albertans to say, well, this is our oil and this is our gas. Why are we paying these high prices for it? We pay the same price as consumers elsewhere. What we do benefit from, though, is the royalties that those oil and gas producers pay to the provincial government. So we do receive a very distinct benefit from those high oil prices. We just don't see the benefit at the gas pump.
Yeah, my hubby works in Syncrude and he pulls it out of the ground, and he pays more in Fort McMurray than we do in Edmonton.
Yeah, I bet. And a lot of that just has to do with transportation costs. With my guess is, I don't know if there's refineries in Fort McMurray, but they probably have to truck refined gasoline from Edmonton refineries back up to Fort Mac.
Thank you. And my next question is, I watched a special on 60 Minutes, and they were talking about the supply chain issues that they were having down in the US, and how ships are not even being able to dock and take cargo off, and, issues with the truckers taking the cargo out. And, you would think that if everybody around the world is having these issues, that the government would act quicker on, trying to solve that than, hitting us with interest rates.
Well, it's a good point. I don't know exactly how much governments might be able to do. I always say we give governments both too much credit and too much blame. They take too much credit perhaps when things go right, but we also blame them for a lot of things that are simply, out of their control. And I don't want to let governments off the hook too easily here, because I do think we should hold our governments accountable. But, if there is a backlog of a shipment of something because, the component part can't make it out of a factory in Shanghai, and that creates a backlog of ships trying to dock in Long Beach, California, and Vancouver and elsewhere, I don't know precisely what government tool they could use to sort of sort through that backlog. I think it will get sorted out, but it's taken longer than we had thought, and it might take a little bit longer yet into 2022 before those backlogs sort themselves out.
Yeah, because the one guy who was waiting for his goods, and it's not as if you can go in there and just pull it out of the cargo container thing. You have to wait until they go through the process of it. he had already paid for inventory costs, like additional costs on the inventory sitting there up to $1 million.
Wow.
And he had put his order in May, and this was in December. And, so at that rate, all these businesses could go under.
Yeah. Well, and I guess, and I don't want to speak for the government on this, but my guess is if there was someone here from the federal government or provincial government, they would say, we understand this, and this is why we have responded with these, in some cases, very generous benefits, emergency relief funds to businesses that might be seeing that kind of pain. That's my guess is what they would say.
Thanks, Todd.
I don't know about anybody else, but I ordered quite a bit of stuff from China and get it within sometimes days lately. It's getting faster and faster all the time. I'm amazed.
Well, that's good to hear.
That's good to hear.
Stuff that's in Amazon buildings.
It looks like Anil has a question. All right.
Yeah, thank you. Thank you. Todd, I've been watching you for over 10 years since you've been coming to the chamber in Rocky. I don't know if you remember me, but you look incredible. You look the same. I always ask.
Filter is on the Zoom call. Yeah.
Whenever I get an opportunity to ask, to talk to you, I know you presented a really nice balanced perspective, but I'm a small-time developer, and I always have these, these things where I'm about to invest a large pool into projects, and I'm thinking, yeah, there's a balanced perspective. Interest rates are going up, but demand is pretty solid. It should be all right. But just in the last 2 months, interest rates have almost doubled, from 2.59, 2.69 for mortgages to 4.19, and next month it will be double, probably sitting at 4.7. But it still looks like a buoyant market, and it still looks pretty solid. As an economist, I know you gave us a balanced perspective, but what will you do in a situation like this? If you were looking at housing, just simple housing, we're all interested in real estate here. If you were looking at housing, and what you said 8.8% growth in the next year and a half, 2 years. So it looks like a steady flow. Would I be right in looking at that, even though the rates are going up?
Well, I guess when you ask what would I do, am I the governor of the Bank of Canada, or am I a homeowner or a buyer? I mean, everyone's got a different perspective about what should be done. But let's say I was the governor of the Bank of Canada. I would continue to raise interest rates. I think we need to normalize those interest rates. It feels unpleasant for sure to borrowers, but when you look at the housing market in most of the country, including here in Alberta now, it is decidedly the seller's market, right? And those sellers, or those markets in Toronto and Vancouver, are dangerously overheated. So we need to temper this down, even though that does inflict some pain on potential buyers, 100%. The trick for the Bank of Canada is going to try to orchestrate the managed slowdown of the economy without pushing us back into recession. Now, 2022 is going to be a fascinating year, both for Canada and the US and other central banks around the world, because there is a growing consensus of economists that are saying the only way we can wrestle inflation at these levels back down to where they should be is with the recession. No one wants a recession. And certainly the Bank of Canada doesn't want to, trigger a recession. The best they can hope for is really pull back the growth rate in the Canadian economy to something maybe close to a recession in order to get inflation down. That is going to require higher interest rates. But like I always say, in comedy and central banking, it's all in the timing. And they got to get the timing of these rate increases just right. It's not an easy task.
Question.
Thank you.
I remember the late 70s, early 80s. Do we have 18% interest rates coming?
I hope not. I remember when I bought my first residential property in 1992, my mortgage rate was 8.9%. And my parents, who were, they were buying homes in the late 70s and early 80s. By 1992, an 8.9% mortgage. And my mom and dad said, you are never going to see a mortgage rate that low ever again. Lock in for as long as you possibly can. Now, an 8.9% mortgage seems crazy high, but that is probably something, more normal. I don't think we're going back to 18%. We're probably not even getting anywhere close to an 8.9% mortgage in the next couple of years. But I think they have to come higher to something closer to sort of normal. A 2.9% mortgage rate, that's not normal either. It's great if you're, buying, but it's created some overheated markets, and those mortgage rates, they have to come up. But I don't think we're going to 18%. Anything could happen, but I don't think so.
I do have a question, Todd. So if you look at inflation now, Bank of Canada or the Fed or whoever, they're thinking that inflation will come down in coming months and we will avoid a recession and we won't have to hike aggressively. So if this scenario plays out, great. But now let's say this doesn't, and inflation numbers, if I'm right, next year we may see 10-12%. Now, if that happens, BOC is kind of screwed, isn't it? So
yes.
In order to bring inflation down, you need to have rates higher than inflation. And if that happens, your mortgage rates, people in Toronto are screaming right now. I was looking on Reddit and a few other blogs, house pricing is going down, and somebody bought a house and it's $300,000 cheaper now. They want to go to a lawyer. I'm like, we're only 2 months in and we only raised just a couple times. And if these guys keep going and inflation stays here, or the number goes higher, and you raise 50 basis points 4, 5, 6 times, the housing market is, they're not going to like it. And second, when I look at it, I looked at Canada, I looked at Australia, New Zealand, and some countries in Europe. If I look at the income versus the home prices, the US is the only one which is doing okay. It's close to 100%. If I look at Canada, it's over 300%. Won't you say it's a bubble?
Oh, yeah, for sure. I think we are, especially when you look at when those statistics look at Canada, Toronto and Vancouver, those two markets are over half of the Canadian real estate market, just those two centers. So in Alberta, I mean, it's not as severe, but yeah, Canada as a whole, we are an outlier. The little chart I saw, it was from The Economist. I think we were number 4 in the world for overvalued real estate, at least compared to income and those metrics, different ways you can sort of measure it. But yeah, I don't think there's any question Canada, led by Toronto and Vancouver, is a dangerously overheated real estate market.
Yeah, and then as rates rise, and I think this can get real ugly because a lot of homes are held by investors. They have multiple properties, then we can take Airbnb into account and all sorts of things. And if prices start going down and these guys start selling, they can go in a free fall. And whatever happened in the US in 2008, I think it can happen here too.
It could. Free falls are always possible, but this is obviously what the Bank of Canada is trying to avoid. So they're trying to orchestrate this sort of managed slowdown and pullback, even if that means some prices in those cities like Toronto and Vancouver they need to come down. And that's okay. But I guess to your point, we don't want to see it in free fall. That's when people panic, and that's not good for any kind of, rational market buying and selling when things are in free fall and there's panic.
Yeah, because I tried to think about it. I was like, okay, what are the other scenarios which can happen? I was like, okay, let's say they try to play cool and they hike a couple times and they pause, but inflation doesn't. Then what happens to Canadian dollar? It devalues, and that takes inflation even more higher.
Yeah, it could. The Canadian dollar has been kind of remarkably stable over all of this mess of COVID and invasion and interest rate hikes and different things, mostly because, the rest of the world is largely in the same bad spot we're in. We're not really unique. Those high commodity prices have helped prop up the Canadian dollar, but and inflation rates, in fact, in the United States are higher than they are here. So, on balance, the Canadian dollar has only kind of wobbled about 1 penny either way in the last 2 years. I'm a bit surprised that the Canadian dollar actually has been that stable given all of these things going on. But I guess it's just these different impacts on the currency canceling each other out.
Right.
I would suggest there is no Canadian real estate market, and we talk about there's a Vancouver market, Toronto market, there's an Edmonton market, there's a Millwoods market, there's a neighborhoods are local, so
yeah,
it's really,
I would agree. And,
like
and
saying,
all of you would know this far better than me, but yeah, even within Edmonton, I'm sure there's probably a dozen or more identifiable markets, regions, and types of properties.
Certain, there's certain markets, and Ivan would know this, that you get into certain neighborhoods where people like it because of the schools and that kind of thing, that a house goes on sale there that's the same size, and everything else is another house that's up in Calder, and one will go for $500,000 in multiple offers, and the other will sit in the market at $300,000. Nobody wants it. So it's very
and again, this is your all of you people in this group, this is your world, not mine. But yeah, I mean, even the how close the new LRT is coming to the neighborhood. You want it close, but you don't want it right on your front lawn. So there's also different factors.
So when politicians react to a Vancouver and Toronto market, and call it the Canadian real estate market's in trouble, and make policies that slow down that market,
yeah, you're right. The problem is there's no alternative, because we only have one national currency and one national central bank and one national mortgage market. So what happens is, and maybe this is sort of what you're suggesting, it's kind of a one size doesn't fit anybody, especially when you see these really divergent markets like Toronto doing one thing. At least Alberta now, our market is in that seller's market. Most markets in Alberta are. But you can imagine a scenario, say, 2 years ago, when housing prices in Alberta still might have been falling and Toronto's are rising. That makes a really terrible environment for the central bank to set interest rates, because what's good for one is definitely not good for another part of the country.
So Todd, when they make these decisions, the Bank of Canada and that, do they follow countries like the United States and the UK to see what they're doing to make these bad decisions, or?
No. And I used to work at the Bank of Canada. Actually, it was a fascinating 4-year period. I worked there from 1999 to 2003. So I'm like 20 years ago. Boy, saying that out loud is a bit jarring. But when I did work there, it was a really interesting experience. They keep a very close tab on what other central banks are doing and what economic conditions in those countries are doing. But they don't in any sense, follow what the Fed is doing or follow what the European Central Bank. It just tends to be that all of these countries tend to be kind of in the same business cycle. So in this example, for example, the Bank of Canada moved ahead of the US Federal Reserve. Nobody thinks that the Fed is following the Bank of Canada. It was just the timing of their rate increases. So they watch them very closely, but they don't say, well, the Fed moved, I guess we better move too. That's not really what happens.
What's the forecast for June for the next Bank of Canada meeting?
I think they'll go another 50 basis points unless something happens between now and literally, I mean, governing council, that's sort of the inner sanctum of the Bank of Canada. They play their cards pretty close to their chest, because even, an event a day or two before their rate announcement, they could change their mind. So if, Mr. Putin drops a nuclear bomb, there's no rate increase that day. But, assuming things are going to kind of unfold as they look now, I do think we will see a 50 basis point increase in June.
That's fairly unprecedented, right? To have 50 points increase, and let alone two of them.
2 in a row, yeah. It probably, I don't know if it's entirely unprecedented, but for sure in recent memory, I'd say you'd probably have to go back 40 years. But these are unusual times. So
when it dropped like a rock in COVID times, it was unprecedented to drop that much too. So we're just recovering back to where it was at 3.95 before COVID. And
that's the other thing. The Bank of Canada is really keen to get they've always said this, we've got to get it back up to neutral. We're still well below neutral for an overnight rate of the Bank of Canada. So they want to get it back up to neutral so that in the event that there is another recession of some sort, that they actually have some maneuverability to then again lower rates. If they keep these rates rock bottom, or even where they're at right now, which isn't quite rock bottom, they don't have much cushion to lower rates in the event of, and there's going to be some kind of economic downturn again in the future. So they're keen to get these interest rates as they're able, get them back to neutral.
Just a quick question on that note, Todd.
Yeah.
What's your idea of neutral for the Bank of Canada right there?
Well, it's more the Bank of Canada's idea than mine, but they would say between 2.5 and 3% an overnight rate would be neutral. So we're still a ways off that. We're not as far off as we used to be. What are we at now? I've kind of lost track. I think we're at 1% right now.
Yeah.
So, if we see a 200 basis points between now and next May, that would put them just slightly above neutral. But the interesting thing is 20 years ago when I worked there, 4.5% was considered neutral. These days, it's more around 2.5% or 3%.
Any other questions out there?
I shouldn't be surprised that this group is particularly keen on monetary policy and no one's asking about Bitcoin or things like that. Which is probably good.
Great. That's an interesting topic as well.
Well, that's another presentation, maybe some other night.
Yeah.
I don't own any cryptocurrency right now. So
I think that one's gonna go much lower too. Everything we have in this world is just a function of low interest rates, right? Everything. And if that era is done, and these things can survive.
Yeah, the crypto world is getting hit hard the last few days.
Yes, it is. I'm not involved in that world. I kind of watch it as a bemused onlooker.
It was interesting. Michael Saylor came out and because he's big into Bitcoin and he's been buying Bitcoin every time it goes down. And he said if Bitcoin goes below 21,000, that will kind of put MicroStrategy into a weird situation, maybe close to bankruptcy. I was like, okay, then these guys will probably take it below 20,000.
Yeah, that's a whole other presentation.
Well, if there are no other questions, I want to thank you again for inviting me to speak and to return to the group. And go Oilers.
Thanks, Todd. As always, some great information and well presented, of course. And yes, go Oilers. Until our next presentation.
All right. Have a great night, everybody.
Thanks, Todd.
Bye-bye.
All right, guys. Well, that was awesome. I just sent out a poll. Complete that for me if you could, in regards to future meetings and whether we do them in person or not. So now we're going to do the deals and steals round. Let me just bring my PowerPoint back. It's not often that you.
Sorry, before I vote, I was just going to ask, we have talked to think about having hybrid meetings where Zoom could be done for people who want to stay home, or you could meet, but that's assuming the meeting rooms have a certain standard, like they're a digital boardroom sort of thing. That's not a voting option, and I assume that's because the hotel doesn't have it.
Yeah, I mean, that adds some logistics. I mean, ideally, for sure, we'd like to have that as an option. It would just be a matter of, equipment and somebody to, I mean, we can probably videotape it and we could probably live stream it as long as, somebody's manning it. So we'll look at that because obviously there's, over these 2 years, we've had people that have been joining us from across Canada, and it'd be nice for them to continue to participate. But yeah, it's just a matter of equipment and someone staffing it. We can set up a camera in a spot and not move it. Now, when we run on a stage at the hotel, typically the presenters are moving around. So, so that's things we'll look at. I'm just getting a little itchy to do things in person. I have been in my business. So this is probably the only thing that I haven't been doing in person. So that all makes sense.
Yes, it does. Thank you.
No problem. So deals and steals around though. So this is where you can unmute yourself and share a deal that you have on to share with the group. Maybe you're looking for a deal. Maybe you have a deal. Maybe you're looking for a joint venture partner. Maybe you have a service that real estate owners and investors could utilize. So if that is you, unmute, tell us about your business or your opportunity or your property.
Well, I offer?
Go ahead.
Cool. Well, my name is Andrew, and I'm a student franchisee of Student Works Painting, a property painting business. So we paint residential and commercial buildings, interiors, exteriors, decks, and fences. And so if you have any painting needs, feel free to get in contact with me. I can give you a free quote.
Beautiful.
I'll put my info in the chat.
Yes, please do.
Is your info available after the meeting's over if it's put in chat?
Around the chat, there's 3 dots that you can click on to save the information from the chat. Now it's different on everybody's different, whatever you're watching it on. Another option is maybe go to the chat, take a picture of it if you're worried about not being able to access it later.
Okay, thanks.
Anybody else? Definitely a quiet bunch. Well, as always, I always pitch Sean and myself. If you have any real estate needs, buy, sell, any investor mentoring, we're here to help. And I think we have a few people that we're working on jointly. So feel free to reach out. If you scroll up in the chat, my contact information is in there, and it's on the screen as well. So go ivanablar.ca and you'll reach some information on me, and visit seannp.com and for information on Sean. Anybody else? Anybody have a property they want to offer up? Well, then if there isn't, then we can move towards the breakout rooms.
I'll just stop the recording.